Welcome to this comprehensive overview of real estate, a fundamental asset class for any serious investor. Understanding its various forms is crucial for navigating the property market effectively. This knowledge forms the bedrock of informed investment decisions. Real estate, at its core, encompasses land and any permanent improvements attached to it. This includes everything from buildings and infrastructure to natural resources like water and minerals. It represents a tangible asset with enduring value. The importance of grasping these distinctions cannot be overstated. Whether you are buying, selling, or investing, a clear understanding of each real estate type allows for strategic planning and risk mitigation. It empowers you to identify opportunities aligned with your investment goals. Residential real estate is perhaps the most familiar category, primarily designed for human dwelling. It serves the fundamental purpose of providing housing for individuals and families across diverse demographics. This sector is often seen as a stable investment due to constant demand. Its primary purpose is to offer shelter, but for investors, it represents a source of rental income and potential capital appreciation. The residential market is highly sensitive to demographic shifts, interest rates, and local economic conditions. Single-family homes are detached houses, often with private yards, offering privacy and space. They are popular for long-term rentals and can appreciate significantly in desirable neighborhoods. Investment in single-family homes often involves managing individual tenants and property maintenance. Multifamily dwellings include duplexes, townhouses, and apartment buildings. These properties house multiple tenants, providing diversified income streams. Investing in multifamily units can offer economies of scale in property management and maintenance. Condominiums are individually owned units within a larger building, sharing common areas and amenities. Owners pay homeowner association fees for maintenance and services. Condos can be attractive for investors seeking lower maintenance responsibilities compared to single-family homes. Manufactured homes are prefabricated houses built in a factory and then transported to a site. They offer a more affordable housing option and can be placed on owned land or in manufactured home communities. Investment considerations include land ownership and community regulations. Several factors profoundly influence residential real estate values and investment potential. Location is paramount, dictating desirability and rental demand. Proximity to good school districts significantly boosts property values and attracts stable tenants. Overall market demand, driven by population growth and economic health, also plays a critical role. Understanding these influencing factors is essential for making sound residential real estate investment choices. Commercial real estate refers to properties used specifically for business purposes. Unlike residential properties, these assets are designed to generate income through business operations or by leasing space to businesses. This sector offers diverse investment opportunities. Income generation is a defining characteristic of commercial real estate. Owners typically lease out spaces to various businesses, securing steady rental income. Lease terms are often longer than residential leases, providing greater income stability. Office buildings are a prime example, housing businesses ranging from small startups to large corporations. Their value is influenced by economic growth, employment rates, and the demand for workspace. Location in business districts is a key driver. Retail spaces encompass shopping centers, individual storefronts, and strip malls. These properties thrive on consumer spending and foot traffic. Their success is closely tied to the economic health of the surrounding community and evolving retail trends. Hospitality venues, such as hotels, motels, and restaurants, also fall under commercial real estate. These properties generate income through services provided to guests and customers. Their performance is highly sensitive to tourism, travel, and local leisure spending. Key influencing factors for commercial real estate include location and accessibility. Properties situated in high-traffic areas or with easy access to transportation networks command higher values. The economic health of the area directly impacts tenant demand and rental rates. Understanding market trends, tenant creditworthiness, and lease structures is vital for successful commercial real estate investment. This sector often requires more sophisticated financial analysis and risk assessment. Industrial real estate is often classified as a specialized subset of commercial real estate. These properties are specifically designed and utilized for industrial activities. They play a critical role in the global supply chain and manufacturing sectors. Their specific design caters to manufacturing, warehousing, distribution, and research and development operations. These facilities often feature large open spaces, high ceilings, and specialized infrastructure to support heavy machinery or extensive storage. Factories are facilities where goods are produced or assembled. They require robust infrastructure, access to raw materials, and efficient transportation links. Investment in factories is often tied to the health of specific manufacturing industries. Warehouses and distribution centers are crucial for storing and moving goods efficiently. The rise of e-commerce has dramatically increased demand for these properties. Proximity to major transportation hubs is a significant advantage for these assets. Data centers are highly specialized industrial properties housing computer systems and associated components. They require massive power supplies, advanced cooling systems, and high-level security. Investment in data centers is driven by the ever-growing digital economy. Location factors are paramount for industrial real estate. Proximity to highways, railways, and ports is essential for efficient logistics and supply chain management. Access to transportation infrastructure directly impacts operational costs and efficiency for tenants. Demand drivers for industrial real estate include the growth of manufacturing sectors and the relentless expansion of e-commerce. Supply chain logistics have become increasingly complex, fueling the need for modern, strategically located industrial facilities. Land, in its simplest definition, refers to undeveloped property. It is the raw material upon which all other real estate types are built. Investing in land offers unique opportunities and challenges. Types of land include vacant lots within urban areas, agricultural land used for farming, and recreational land for leisure activities. Each type presents different investment profiles and potential uses. The potential uses for land are diverse. It can be developed for residential or commercial properties, utilized for farming or forestry, or preserved for recreational purposes. Zoning regulations dictate what can be built or done on a particular parcel. Influencing factors for land investment include its location, which determines its development potential and market value. Zoning regulations are critical, as they specify permitted uses and building restrictions. The potential for future development significantly impacts land appreciation. Investing in land is often a long-term strategy, with potential for substantial appreciation as surrounding areas develop or zoning changes. It can also be a speculative investment, relying on future growth and demand. Special purpose real estate encompasses properties that do not neatly fit into the other conventional categories. These assets are characterized by their unique design and specific intended use. They often serve a public or institutional function. These properties are typically designed for very specific purposes, making them less adaptable for alternative uses without significant renovation. This specialization can impact their marketability and valuation. Examples include schools and hospitals, which are designed to serve educational and healthcare needs. Their value is often tied to the demand for these services in a given community. They are critical infrastructure assets. Churches and government buildings also fall into this category, serving religious and civic functions respectively. These properties often have unique architectural features and are built to last for generations. Recreational facilities, such as golf courses and stadiums, are another type of special-purpose real estate. Their value is linked to leisure activities, sports, and entertainment demand. They often require extensive land and specialized maintenance. Valuation of special-purpose real estate can be complex due to their unique characteristics and limited comparable sales. Appraisers often use specialized methodologies, considering factors like replacement cost and functional utility rather than just market demand. Understanding the different types of real estate is absolutely essential for making informed decisions in the property market. Each category presents its own set of opportunities, risks, and investment strategies. A nuanced approach is always recommended. Every category, from residential to special purpose, possesses unique characteristics, market dynamics, and potential rewards. Investors must carefully assess these distinctions to align their investments with their financial objectives and risk tolerance. By grasping these fundamental classifications, you are better equipped to identify suitable investment vehicles, conduct thorough due diligence, and build a diversified and resilient real estate portfolio. This knowledge is your most valuable asset.